Hello, everybody, and welcome. So today is going to be a quick little breakdown. It's Saturday, April 27th, 2024. This is going to be a breakdown of Friday's the 26th trade. So here's what I did. So remember, I do top-down analysis. So I'm starting from the top, and we're looking at the weekly chart. So on the weekly, we had this bullish fair value gap. So we had already entered into it and rejected off of it, but one big note about liquidity is that the market is either moving to a fair value gap or a higher low. So, in my opinion, I was like, we are probably going to try and test this weekly bear again. So I was bullish for the day, or at least for the AM. I then went to the 4-hour time frame, and I realized that we had this big 4-hour bearish fair value gap that we had respected, but we're then starting to re-enter into overnight. Then I went to our 1-hour chart and I looked for anything. I couldn't really find anything great. But as you can see, we go from weekly to 4-hour and 4-hour to 15-minute. So the 1 hour doesn't really matter. Now it's time to get into my entry. So everything is about establishing a bias, right? So if your bias for the week is you're going to go up or you're going to go down, you also need to look at the daily to know what you'll do specifically. And this is why the daily is so important, right? So as you guys can see, we have this daily bearish fair value gap. And what we were able to do in the daily, which is, here to here, it's a bullish fair value gap, we entered back down into it. But overnight, we started to break out from it, meaning we were respecting the bullish fair value gap. So I was like, okay, we're definitely going to make a bull run in AM. So what I wanted to do was I wanted to mark the true open. And here's a fun fact. The true open, the kill zone to trade in New York, I'm Eastern time, I'm New York trading session. So from 7:30 to 10:30 a.m. is where I want to go. At 7:30, that's what you call the true New York Open. You're going to go in the 3-minute or the 1-minute, it's up to you, and you're going to mark out the 7:30 high or low. Since I'm bullish, remember, it always starts with your daily bias. And you can also use the power of 3, which, as we see, Asia made a strong move. London was able to take out Asia highs, so we made our raid, and then we took out Asia lows right before open, which is, what we would call a sweep, and we were able to run back up. So, if Asia consolidates and we manipulate against in London, then we go to our bias in New York AM, or Asia makes a strong move, London consolidates, which, both of them made pretty solid moves, to be honest, and then we continue our bias. We needed a raid or a sweep, so London swept, but then we got that raid or sweep of those Asia lows here right before AM started, and that's why AM then continued our bias of bullish. You're going to go on the 3-minute, and you're going to find 7:30 a.m. because that is our true open. And since we're bullish, we want to sweep the 7:30 lows. If we're looking for shorts, we want to sweep the 7:30 highs. So you go to the 7:30 candle, which is right here. And as you can see, I marked out the low. The 7:30 low is the low of this candle right here at 7:30. So that's what I'm trying to sweep. But you want also an overlapping higher time frame fair value gap for extra confirmation on your entry, which luckily we were able to find right here. It's a very small one, but we had respected it before and before and before. And now as you can see here, we broke through this fair value gap, but we were still respecting the outer daily bullish. So when we broke through this fair value gap, I had an idea that we were going to be able to come back inside of it, and that's where I get my entry, because as you can see, 15-minute to 1-minute, you go to the 1-minute, and this is where many people would enter with a market maker model. I enter with an inverse fair value gap, because that's just a better model in my opinion. So I was looking for an inverse of a bearish fair value gap. As you can see, we had this bearish fair value gap form on the 1-minute. So here are the 7:30 lows. Here is the 15-minute fair value gap, this red line, and here is the daily. Right at open, we run, and not only do we respect the daily, we also respect the 15-minute, and we inverse with strength this 1-minute bear. So I got it in the middle of this candle because it had so much momentum, and I targeted internal liquidity. So this guy and this guy. I honestly could have targeted this high because it would have gotten hit, but I wasn't trying to stay in the trade that long. And so here it is. As you can see, we inverse on the 1 minute with strength. We sweep the lows, so we came down under these 730 lows, but then as soon as we get back to them, we're finally re-interacting with these lows. We're respecting the daily and the 15-minute bulls, and we inverse the 1 minute. We have a lot of buying pressure. Slight pullback here. I put my my stop loss back below the 15-minute fair value gap, and then my take profits, I had 2 of them. Like I said, we target that internal liquidity. So if I were to summarize it, it's basically you're looking for a lower time frame inverse fair value gap or market maker to form inside of a higher time frame fair value gap, which would be our 15-minute, in context of the overall bias, which was bullish. So we had bullish bias from looking at the weekly and the daily. We got our 1 hour and we got our daily bull fair value gap to respect, and we got our 15-minute to respect, those higher time frame fair value gaps, and then we went to the lower time frame for a sweep on that true open and an inverse fair value gap entry on that 1 minute. So it's really, that's why I call it top down. You're going from the weekly to the daily to the 4 hours to the 1 hour to the 15 to the 1 minute. You're just going all the way down using all your tools, and if all of them overlap and line up, you can get a pretty good solid entry out of it, and luckily we were able to. Sadly, if I held this trade a bit longer, we would have been able to get some good moves, but overall this was a 73 tick trade. One and done trade. I made $1,000 and I was out. As you can see, proof of my win from today, copy traded, so made $460, and then after commissions made $442 on one account. Multiply that by 2, it's about 900, but we round up here. Could have targeted these highs. They got smashed as well. As you can see, look at this uptrend, absolutely beautiful. No highs over here that I think, at least not from recent. But yeah, that is the play, guys. You just got to go from the higher time frame to the lower. Collect your bias, because bias is everything. You never want to trade against your bias. And then that lower time frame entry will finally show up. So yeah, have a good one, guys. It's really that simple. I was in and out of the market in about, how many bars? 10 bars, 10 minutes, boys. 10 minutes I was in and out of the market. And I was red for maybe 1 or 2. So yeah, it's really that simple. It's just, it's just trusting your bias, setting a good RR, getting good take profits, scaling, and sweeping, just making sure everything overlaps and works well. If you have any questions, my Instagram is in the description. You could DM me for a link to join the Discord. I will send it your way, and you guys can start making bank every single day off trades like this. And when the summer starts in about 2 months, I will be live trading every single day. So yeah, have a good one, guys. Peace out.